Hello, ladies and gentlemen. This clip was taken straight from the Dylan Holy Experience, twitch.tv/RealDMH. I'm covering an op-ed piece from Brent Arends talking about why Bitcoin won't diversify your portfolio. I'm going to give my opinion on it, and I hope you enjoy. Now, before we begin, I want to preface this with Brent Arends. No hate to you, my friend. No hate to you at all. You wrote an op-ed piece, you gave your opinion, and I appreciate it. Now I'm going to give my opinion to your op-ed piece. The title: This is why Bitcoin won't diversify your 401k. The picture: a man blindfolded, about to fall off a cliff. Let's see what's going on. One of the less ridiculous and more persistent was the argument that Bitcoin and other cryptocurrencies would somehow diversify your 401k, IRA, and other retirement accounts because they would perform as asset classes differently than stocks, bonds, and the like. Such arguments can be dangerously seductive because they can be technically true without being helpful. For example, lottery tickets are a diversifying asset because the returns on a fistful of lottery tickets have absolutely no correlation or connection to the stock or bond markets. But that doesn't change the fact that the lottery tickets are terrible investments. Okay, first things first. And I would like to preface this with, most cryptocurrencies, hell, all but probably 5 or 6 of them that I can list are speculative assets and are gambling. People buy them, and it's not just cryptocurrencies. I'm talking about NFTs as well. But they are speculative assets. They have absolutely no value. It really is like in the 2020s or in the 1920s when the markets were just going up and people were buying stocks for the sole purpose of them going up and selling them higher. That's mostly what cryptocurrencies are. 99.9% of them are speculative assets that have absolutely no value. And I think if you hold them over a 10 to 15 or 20 year, 30 year, 40 year period, 50 years even, hell, they will go to zero. You will lose all of your money on them. But Bitcoin, in my opinion, because this is an op-ed piece, Bitcoin, in my opinion, will not be one of those assets. Bitcoin will be an enduring, timeless asset class that people will be investing into over the next 40 to 50 years. I think it's going to become a mainstay in people's 401ks. Now, people can make the argument, well, there's no intrinsic value to Bitcoin. It doesn't exist. It's not real. Well, hate to break it to you, 90% of your US dollars aren't real either. 90% of them are in your bank account. Dylan, that's not true. Dylan, that's not true. That is true. How many real paper dollars are in your wallets right now? I have $25 in my wallet. And I can guarantee you I have a lot more in my bank account. Because it's just not practical anymore. Everything is digital. But digitality isn't something that gives an inherent value. It's just that it is digital. I feel like that basis point, that starting argument of just because it's digital doesn't mean it lacks intrinsic value, I think that's a good place to start. Now we can start talking about market valuations and the actual value that people find in things. There's nothing inherently valuable about Apple. I mean, they're a business, and people's value proposition behind it is that effectively people are going to buy more iPhones over time. And generally, most of the market finds that valuable. But it doesn't have any intrinsic value. It's only value that we have attributed to it. And that's what I believe Bitcoin already is. And I think the mass market is slowly going to realize this over the next 10 to 15 years. Now, this article, albeit, is from 4 years ago, so take that with a grain of salt, but it is an interesting article. Now, this doesn't happen all the time, but it's certainly something interesting to look at. The Visa network crashes, as did the MasterCard network 4 years ago, as the Bitcoin network boasts a 99.99% uptime since the Genesis block. Visa's payment system crashed yesterday, preventing credit card usage and payment processing across the entire EU, Ireland, and even the United States. Now, I don't know what the uptime of the Visa network is. I'm sure it's pretty comparable. I'm sure it's within the 98 to 99% range. But the advantage that Bitcoin has in the Bitcoin payment processing network is the fact that it is decentralized. See, what happens with the Visa network is you have a few centralized locations that are able to process payments, and that's fine. That's fine. But a big part about Bitcoin is that it uses a proof of work standard, which means that anyone with processing power can effectively loan that processing power to the Bitcoin payment network, and they will help basically host the Bitcoin payment network, and it will verify these transactions against other peers and other, quote, hosts of the Bitcoin network, and it's completely decentralized. There is no picking on who is a trusted source and who is not. You verify it against other people, and everything generally is the exact same. If it's not, you usually fork it and make a Bitcoin Cash, and then a Bitcoin Cash Diamond, and a Bitcoin Cash ABC, and then you turn that into Bitcoin X, and yada, yada, yada. That's why we have so many hard forks of the Bitcoin network. But everyone is equal. Obviously, there are people with more processing power, but everyone is verifying the same information. It is a democratization, and it is a decentralization of payments. But Dylan, it doesn't have a use case. Actually, I have a perfect example. A gentleman that I know, when the Ukraine was invaded by Russia and there were refugees and people had to leave the Ukraine because their homes were being bombed, they had to go to Poland, I think Warsaw specifically. And a gentleman that I know, he was wanting to wire $5,000 to one of his friends who lived in Ukraine, who lived in the Donbass region that was invaded. And he was trying to send $5,000 to his friend's family to make sure they could buy food. And what happened was, because it was done by a centralized entity, they couldn't verify who the funds were being sent to because, well, they needed a physical address, but they had been displaced because the physical address doesn't exist anymore because it was bombed by Russia. And it took 3 months for him to even send that wire off, and then it came back. They couldn't even complete it. Now, if you use Bitcoin or any other cryptocurrency for that matter, here's what would have happened. He could have messaged his friend, he could have texted him or used Telegram or Skype or something like that. His friend could have sent him his Bitcoin address. Then that gentleman sends him $5,000 worth of Bitcoin. It would have been there in 1 second, maybe a little more, maybe a few more minutes. And it would have costed not $30 like a wire transfer fee in the United States or $50 for an international wire transfer fee. It would have costed at most $10. Bitcoin is the most easily transferable asset in human history. That's the perfect use case for it. Wire transfers. It's cheap. It's cheaper. It's faster. And the philosophical difference between a wire transfer versus a Bitcoin transfer. A wire transfer, you send it off and it's approved. It's approved by a centralized governing body, the automatic clearinghouse or an automatic clearinghouse. You send a Bitcoin transfer off and it's confirmed by the network. And approval and confirmation are two very different things. Approval a party looks at it and either lets it go through or shuts it down. In most cases, they let it go through, of course. But a confirmation, they send it into the queue and an algorithm pushes it through. As long as all the miners and all the network nodes agree on it, they'll push it through. It's confirmed. We're entering into a point where there is an ideological war on certain political views and certain political beliefs. I'm not here to tell you whether they're good or bad. That being said, there was the truckers' convoy in Canada. They were shutting down opposition parties. They were shutting their bank accounts down. They could not access their money. They would let them starve. That's impossible with Bitcoin. Literally, fundamentally impossible. Fundamentally impossible. And that's my first rationale. My first reason why I find it valuable. I'm going to continue on with this article, and then we're going to break down a few more reasons why. It was timely that not long ago, finance professors Luciano Somoza and Antoine Didesheim of the University of Lausanne, I think that's how you say it, and the Swiss Finance Institute produced a paper, The End of Crypto Diversification Myth, that exploded this fallacy. One of the key rationales for the inclusion of cryptocurrencies into the long horizon portfolios is the promise of diversification from the stock market. Indeed, since none of the suggested and much debated fundamental values beyond crypto assets have a clear relationship with equity returns, it is reasonable to assume that the two assets should be uncorrelated. They add, it was reasonable to think that until the last couple of years, because they report since 2020 the correlation between Bitcoin and the S&P 500 has been consistently positive, reaching values as high as 60%. So 60% of the time, Bitcoin and the S&P 500 are usually increasing against each other. So 60% of the time, S&P 500 goes up, Bitcoin goes up, or down, vice versa. And they add, there is a simple reason for this. And if any crypto trader wants to know what that reason is, they should look in the mirror. We argue theoretically and empirically that this correlation is largely caused by the trading habits of retail investors. Namely, the fact that crypto-oriented retail investors tend to trade cryptocurrencies and stocks at the same time and in the same direction. So they are generally betting equity markets and cryptocurrency markets are increasing or decreasing, longing or shorting at the same time in parity. Somoza and Didesheim got access to trading data from Swissquote, Switzerland's leading platform for online trading, which allowed crypto and traditional stock trading from the same platform and the same accounts or online wallets. They were able to compare the individual daily trades in stocks and cryptocurrencies of tens of thousands of customers. When agents open a cryptocurrency wallet, their overall portfolio becomes riskier. People who hold cryptocurrencies, they observed, have a strong preference for growth stocks and speculative assets. Listen, it's true. It's true. Most people who purchase Bitcoin usually have a higher risk tolerance than people who tend to invest in more traditional markets. And the fact of the matter is, again, most cryptocurrency assets are speculative. And I'm not saying that you should go out and buy, Dogecoin or Shiba Inu or hell, even Uniswap. I'm not saying to go out and buy those. And I'm not even telling you to go out and buy Bitcoin. Again, it's not financial advice. I'm just saying why I buy it, why I find it valuable, why it is valuable in my opinion. But there is risk profile there. And I think it's not just cryptocurrencies being a negative thing. Again, in the environment that we have been in for the last 13 years, risk has been rewarded more often than not. People get riskier with their assets. If you told someone, if you told Benjamin Graham that the largest company in the world, Apple, at least on paper that we know of, Apple, increased, we can even take a look at it, has increased from a weekly basis, call it from 2020, so $60, 282, 300% in 2 years, he would have shipped bricks. And obviously Bitcoin is even crazier. It's even more parabolic from 6,000 to 70,000 or 69,000. Nice. Over that same period of time, you see a 1,000% gain. That's crazy. That's very parabolic. But it's not, this type of growth structure is not unlike something we've seen from the Dow Jones. We're running it all the way back. We're running it all the way back, child. The Dow Jones from 1896. Or if you want to go even crazier, you go from 96, yeah, so 1896, $20 to $55. So a 300%. Still, Bitcoin more parabolic. Nonetheless, Bitcoin is an immature asset class. Cryptocurrency is an immature asset class. So it is going to be more speculative and more risky right now. It's going to be more parabolic and extreme in price movement, either to the upside or the downside. But there are also market fundamentals that play into this. And to completely disavow an entire asset class, an entire asset class, thousands of cryptocurrencies, most of which are scam coins and pump and dump schemes and Ponzi schemes and pyramid schemes. There are a few assets in there that are valuable, that I'm purchasing for the long term, Bitcoin being one of them. It is hardly a coincidence that Bitcoin peaked in November of last year, just around the same time as the NASDAQ composite, or that it plunged in the first half of this year along with the NASDAQ and the S&P 500, or that it has somewhat rallied against the stock market with the same type of parity. Bitcoin is not decoupled yet. People within the cryptocurrency community, and I'll give this to my good friend Brett. Cryptocurrency, and Bitcoin specifically, has not decoupled from the market yet. And it would be reckless to think it has. It still follows the same price movements generally as the S&P 500 and the Dow Jones. But that's not a reason to not buy it. That's not a reason enough for me why I have not bought it. Generally, the rest of this article, I'll just paraphrase it. They're talking about how Bitcoin is seen as effectively a tech stock. In other words, Bitcoin hasn't been diversified at all. It's just been yet another speculative, leveraged gamble on the tech bubble. Another speculative, leveraged gamble on the tech bubble. I don't think it's that. I do not think it's that. First things first, the decentralized payment network. Again, this happened once 4 years ago, so it's not like it happens super frequently. I can go to the supermarket or go to McDonald's, go purchase something with my MasterCard or my Visa or my American Express or Discover card, and I don't have to worry about the payment declining because the network is down. But I think when you're looking at something through the lens of something like a trucker's convoy, that's when a decentralized payment network like this, you start to see a value proposition behind it. When you're trying to send someone money in a war-torn region, and you can't do it because they can't verify your address through traditional means, through sending a wire, not only is it cheaper, it's faster, it's easier, and more frictionless to send Bitcoin to them. Now, it's not just the payment network. I want to talk about the Bitcoin supply curve. See, how Bitcoin works is you have people supplying their processing power to that decentralized payment network. And through that, they reward them with Bitcoin rewards from blocks. It's basically from each transaction that they confirm in this period of time, there's Bitcoin that they can effectively find from digging in these mines, from mining the Bitcoin. That's what mining Bitcoin is. It's confirming transactions and payment processing on the Bitcoin network. And there's a halving period that's involved with that. And what a halving period is effectively every 4 years or every X amount of transactions that are confirmed, the amount of Bitcoin that you can get from these transactions with your processing power is halved. So it's a sustained decline in the inflation rate and a slowing of the actual supply of Bitcoin that is introduced to the Bitcoin supply. So let's take a look at this. This is the total Bitcoin. So there's 21 million theoretical Bitcoin digitally that you can purchase, or that you're able to mine. So within the first year or two, let's call it 1 year, by 2010, there were 25% of the supply was increased or introduced into purchasing power, not locked behind these different blocks and everything. 25% inflation rate. Then by 2013, you have about half of the supply. By 2017, you have 75% of the supply. By 2020, or 2021 specifically, by 2021, you had introduced into the supply 90% of all Bitcoin that will ever be mined. The last Bitcoin will be mined in 2140. So let's run it back a bit. Let's go back to our inflation. So the last Bitcoin ever, the 21 millionth Bitcoin, will be mined in 2140. So call it 118 years from now. In that time, the inflation rate will be steadily declining. Lower inflation, like sustained lower inflation. Guaranteed. Guaranteed by the network. And if you look at historic inflation rates of currencies that have gone off of fiat, or that have turned to fiat, that have gone off of a gold standard, something backing that currency, their inflation rates typically do not do this. They typically do not go down. The supply, this is the supply curve. The supply typically does not flatline. Once inflation rates start to jump because you've decoupled an asset off of a gold standard or another commodity standard, it typically begins to go haywire. We can take a look at the Weimar Republic, a perfect example, in Germany in 1923. This happened in 1 year. This happened in literally 1 year. The price of one gold mark, so effectively, call it an ounce of gold, it was going for about 5,000 marks, paper marks. By the end of that year, it was going for 1 trillion. So it went from 5,000 to 1 trillion. That's their fiat currency. That is their fiat currency. But Dylan, that's Germany. That's never going to happen in the United States. The M2 money supply. Let me show you this. The M2 money supply from the United States, which is effectively all the paper money that was printed in the United States. Boom. That's the M2 money supply. All the money in the United States. Look at this. From 15,000, so about $15 trillion in asset, or actually dollars, so $15 trillion that are actually circulating to 21 trillion. Now, obviously, on a short-term horizon like this, it doesn't look super crazy. But look at this from 1960. I mean, we are entering into a period of exponential money printing. It's going to start happening. It's going to be sustained. At least that's my value proposition. That's what I think is going to happen. I'm not going to talk about what's going to happen to equity markets. I'm not going to talk about what's happened to the Dow Jones or the S&P 500 or anything like that. This is what's happening to the dollar. We're entering into an era of the instability of the purchasing parity of the United States dollar. We're entering into an era of an unknown factor of what's going to happen to the United States dollar because we have a lot of debt. And we're going to start getting margin called. And I'm holding United States dollars right now. But I prefer to own an asset that supply has effectively flattened, that 90% of it exists in the market right now, and only 10% of that is going to get introduced over the next century, if not 18 years longer, 118 years. In the meantime, it is a guaranteed sustained decrease in its inflation rate. So not only is it going to be a more digitally scarce asset, digital scarcity, talking about NFTs. Oh, we're burning NFTs. No, NFTs are stupid. They're very dumb. I don't like NFTs. Let me make that very clear. I'm not talking about NFTs. I'm specifically talking about Bitcoin. Bitcoin is a digitally scarce asset. Not just that, I think that there will be not just a philosophical mass market appeal to Bitcoin as there's growing political polarization in the United States, if not elsewhere in the world, internationally. Not just a philosophical yearning for it, but from a financial perspective, it's going to make more sense for institutions to lean into Bitcoin. This is what the Treasury did. The federal government's already done this. The federal government is embracing cryptocurrencies, and Bitcoin being the main one. So I do believe Bitcoin will diversify your portfolio. And I do not believe it is a speculative, leveraged gamble on the tech bubble. At least not in my opinion. I'm going to keep purchasing it. I can't speak on behalf of anyone else. I can't tell you to purchase it. But I'm purchasing it. I find it valuable. I think the use case of Bitcoin will be realized when the price of bread in America goes from $5 to $1,000. In the same way, the value of one gold mark went from $5,000 to $1 trillion in 1 year. We will enter into an era of hyperinflation in America, in our lifetimes. I'm purchasing Bitcoin for the same reasons I'm purchasing gold. Why I find value in gold. This literally the exact same value propositions. It is a decentralized commodity that is transferable and that cannot be taken from me. Brett, I respect your opinion. I see where you're coming from. I see why you would think Bitcoin is a speculative asset. And right now it does fulfill that niche, you know? People are treating it like it's some penny stock. But I don't treat it as such. In the same way, I'm dollar cost averaging into Bitcoin. I'm dollar cost averaging into the S&P 500, into Ethereum and Solana. I could talk about Ethereum and Solana for, that's a whole other discussion. I'm just talking about Bitcoin right now. I'm going to keep buying it. I find it is a valuable asset that is a depressed price right now. Once again, Brett, I'd like to thank you. I would love to discuss this further with you on the Dylan Holy Experience if you would love to come on. I'm very interested to hear your further rationale behind this. I hope you enjoyed. Brett, once again, thank you for making that article. Hopefully you took something from it. Ladies and gentlemen, if you liked what you saw, be sure to like, comment, and subscribe. If you want to see what I'm posting about on Twitter, my Twitter handle is @RealDylanHoly. And if you want to see where the magic happens on the Dylan Holy Experience, twitch.tv/RealDMH. Hope to see you there, and have a good one.